Welcome to Friday Takeaway. This week I look at two core EPF investees that have had a tough ride since GE14, where the selling seems to have bottomed out for one, while troubles still exist for the other. But we start with the fact that the Federal Reserve kept benchmark interest rates unchanged this week, saying that their wait-and-see approach had steadied the US economy after fears of a slowdown sent markets reeling at the end of 2018. Fed Chairman Jerome Powell added that recent soft inflation data did not hint at broad economic weakness, and more importantly, he pushed back against market hopes that the Fed might lower interest rates later this year, saying that the current stance on policy is appropriate. Sources said investor demand for Uber's upcoming IPO has been strong after it kicked off its roadshow in London. Uber is seeking up to $9 billion in what will be the biggest listing of the year so far. Demand for stock is currently focused on the lower end of its targeted range, though they could still shift as talks with investors continue, the sources said. That would put the amount that would be raised in the IPO closer to $7.9 billion. Apple shares rose this week, pushing its market cap back towards $1 trillion, as its quarterly report and upbeat forecast soothed investors. Apple, Microsoft and Amazon have been fighting hard for the title of most valuable US company, as all three have passed the symbolic $1 trillion mark. Though iPhone sales dropped 17% in the fiscal second quarter, revenue beat expectations and it forecast an upbeat third quarter. They also spent a record $24 billion on buybacks in Q2 after having spent $70 billion on buybacks in all last year, or around 5 times its own spending on R&D. The Malaysian property market is on an uptick and is expected to stabilize this year, according to the National Property Information Centre of the Department of Valuation and Property Services. The property sector in 2018 saw marginal increases in volume and values, with major states like KL and Johor recording the highest increase in market activity. However, the overhang in the residential sector persisted last year, while house prices continued to rise in 2018 from 2017, according to the Malaysian House Price Index. In this week's This or That, I look at two blue-chip stocks that are core EPF investments. The first is Tenaga Nasional, some 14% owned by EPF. The other is Bursa Malaysia, in which EPF owns around 8%. Now, they both have had a tough ride since GE14, but the selling seems to have bottomed out for Tenaga, while Bursa's troubles still seem to exist. So let's find out more. Formed 69 years ago, Tenaga Nasional is the largest electricity utility and monopoly power distributor in the country. They're also one of the largest listed power companies in Asia. They've got more than 9 million customers in Malaysia's population of 32 million, and with sovereign wealth fund Tenaga Nasional, the largest shareholder with 29% of the company. EPF is number 2. Selling in Tenaga has settled down since Khazanah's sale of 85 million shares last month at 12 ringgit 33 cent per share. But since then, investors have been collecting Tenaga, attracted not only by the belief that its fundamentals remain unaffected, but also its attractive dividend yield. Plus, analysts say concerns over Tenaga's outlook due to industry reforms are overly pessimistic and even misplaced. They say that fears over retail competition and a migration towards a full merchant market won't move the needle much in earnings terms, while returns from power generation are inbuilt into the already signed power purchase agreements, which will need hefty compensation payments from the government if altered in any way. The main concern with Tenaga remains uncertainty. Analysts say that although there's a possibility that the government's energy reforms may not affect Tenaga Nasional significantly, there is an element of caution until the proposals are announced. In the meantime, some analysts have lowered Tenaga's terminal growth rate to 2% from 2.5% previously, to account for the subdued long-term growth prospects. Plus, Tenaga's plans for the National Connectivity Plan have not yet been announced, so the market still does not know the capex or earnings contributions from the project. Of the 25 analysts who cover Tenaga, according to Bursa Marketplace, 5 are a strong buy, 7 are a buy, 8 are a hold, 4 are a reduce, and only 1 is a sell. With a consensus target price of 14 ringgit and 16 cents, if you buy now, there is a potential 15% gain in store for you. Formerly known as the Kuala Lumpur Stock Exchange, Bursa Malaysia is the country's share market, involved in trading, clearing, settlement and depository services for the local securities market. They also play a frontline market regulation role. While market activity has been quiet for the past 12 months since GE14, this was borne out in its first quarter results, which came in below consensus expectations due to lower than expected average trading value and derivative contract trading volume. In Bursa's own words, the weakness was influenced by concerns of slower economic growth, weaker corporate earnings and lower palm oil prices. Bursa also added a word of caution, saying that China's economic growth and Europe's plan to ban the use of palm oil and European biodiesel will influence its markets, and specifically in derivatives. Islamic capital market activities have been a bright spot for Bursa amidst the weak conditions, and in particular its Bursa Souk Al Sila commodity trading platform, which has seen a jump in both local and foreign trading participants. Also, operating expenses have also dropped in the shape of lower manpower costs and service fees, which have come due to lower Globex service fees as a result of fewer derivatives contracts traded. Of the 15 analysts who cover Bursa Malaysia, according to Bursa Marketplace, none are a strong buy, 2 are a buy, 9 are a hold, 2 say a reduce, and 2 say a sell. With a consensus target price of 7 ringgit and 11 cents, there is a potential 6% gain to be had following its recent share price weakness.